Hi, thanks for tuning in to our Practical Nerds weekly podcast. I'm Shub, and together with my partner and co host Patrick, we normally invest in founders in design, construction, renovation, and logistics technology. Many of our friends in the ecosystem wanted us to start a podcast on the built world, and in return, we decided to honor their request with a show about nothing at all.
Okay.
Yeah, I sometimes think the new intro. I know it's a new one, but for some reason it has this retro feel to it. Maybe because it leans in on the Seinfeld theme more directly.
Yeah. Yeah. I mean, it wouldn't let us do the exact Seinfeld theme,
Hmm.
but I think we got pretty close.
Yeah, I mean, maybe we can do that once we have enough money to pay Seinfeld some royalties as well.
I think Jerry might not care what he seems to be quite well off.
Yeah, I think he's doing okay.
He's doing okay, right?
He's
Yeah.
doing okay.
Nice. So two countries are doing okay too. Who are these
Yes.
countries?
Countries that are now number three and number four in terms of the largest economies in the world, Patrick. And
So
interestingly, I think a few years ago, the current number three was not number three, and the current number four was not number four. So I think
that
both
is
these
right.
countries have been moving up the leaderboard.
That is true. The number three back then, Japan, is now number five.
That is correct.
Yeah.
That is correct.
Yeah. So
Yeah.
we're of course talking about Germany, third largest world economy, and India since the last quarter, officially the fourth largest in the
That's right.
world,
That's right.
behind Germany, but ahead of Japan now. So we have a reason to discuss India because there's that update. We also have a reason to actually bring up Germany because there were big news coming out of Germany this week in terms of mobilizing investment capital. We had a similar episode actually in Q1, but it turns out that was only a quarter of the capital that was being mobilized. So now
Mhm.
that the mobilization of capital is actually 4 times as large, we felt, hey, let's give each other an update. You give me the India update, I give you the
Yeah.
Germany update.
Let's do that. How about because a few months ago we did our first IRL episode of Practical Nerds, which was
That's right.
about Germany. So maybe we start off by continuing there. In my mind, perhaps it's very crude and oversimplified. I think of the initiative, the 1 trillion euro plan, as the Make Germany Great Again plan.
Oh my God.
I know
So
it's
they,
times to use that phrase, but that's how I think of it. So,
yeah,
what's happening there, Patrick?
it's now called the MFG plan, made for Germany. Obviously, it's a wordplay
Uh huh.
on the famous Made in Germany label that has the strongest manufacturing quality label by perception of consumers, business executives, etc. anywhere in the world. That label was born after World War II. Made in Switzerland, by the way, is the second most powerful
I
in
see.
terms of brand perception. But made in Germany still remains the largest one.
Mm-hmm.
So now it's a wordplay of that. And so what happened this week that led to the Made for Germany initiative, let's say. Okay, so quick recap. I'll keep it much, much, much shorter than the monologue in the last episode. So Germany has officially a new government since, I believe, April. Right ahead of the new government taking over, the German parliament had already agreed to set up two special investment funds that the government, basically it's government-backed money. One of them is for infrastructure spending, and the other one is for defense-related infrastructure spending and manufacturing.
Mm-hmm.
Both together, in terms of US dollars, are round about 1.1 trillion US dollars
Okay.
to be spent over 10 years. But if you ask me personally, Shub, I expect that to be heavily front-loaded as much as it gets. The
Mm-hmm.
German government is typically elected for, and it's not typically, it's always elected for 4 years.
Mm-hmm.
So I expect it to be a little bit more than 40% of that money in those 4 out of 10 years. But now we know that actually that was not the only thing. What happened this week in the Made for Germany sphere is that the new chancellor, Friedrich Merz,
Mm-hmm.
of the center-right Conservative Party, had invited industrial executives, family CEOs and owners, as well as international investors. You remember Shub, he was an executive for BlackRock, Friedrich Merz was, where he also, came out well off and then returned into politics. And then later down the line, it led him to become the chancellor. So he used this context to also mobilize, for example, Henry Kravis of KKR was there in the Made for Germany discussions as one of the high-ranking executives at EQT, probably the European PE powerhouse, as well as the CEOs of SAP, Siemens, Heidelberg, Goldbeck, automotive CEOs. Basically, think of any kind of German company that you have ever heard of. The CEOs or the family owners were there and met with these international investors. And so this group pledged another 740 billion US dollars of investment into Germany. So it's not investment by German companies to be spent elsewhere. This is specifically investment into the German economy, resilience, infrastructure, etc. And so now how do we get from there to the number that was finally communicated by the Made for Germany initiative? And that is about 4.5 trillion that get now mobilized. So we have the 1.1 government backed. We have about 740 from the participants of the Made for Germany meetings this week. Let's be generous. Let's round it to 2 trillion. So where do the other 2 trillion to 2.5 trillion come from? So pundits and people that are familiar with the discussions that have been ongoing since April and have been going on during the Made for Germany discussions this week, these pundits have been saying that there is visibility on 2 to 2.5 trillion of additional foreign direct investment into Germany. And I think that's believable. It's believable because we have been seeing, Shub, since the start of the year, since January, which coincides with the new US administration taking over, trillions of capital being mobilized from the United States into Europe. We see that the euro is gaining, more than 10% strength since the beginning of the year, which is actually not a dollar weakness. It's actually a euro strength.
Correct.
Why does that happen? Because if people want to invest in Europe, you buy euros. So buying euros increases the demand in euros, price goes up. So that's another indicator that we have that is already happening. And then there are fundamental reasons which I want to talk to you about. But that's the context of what happened this week and these past 3 months, why people actually speak of these very large and optimistic, I think, numbers that will be invested into Germany.
Very interesting. So one framework I want to apply, right, to ask you more and learn more about where all of this is going. So, of course, you and I, we don't invest in economies as an asset class. We invest in specific companies. But both Germany and India represent very important countries for us as a, let's say, aggregation of our portfolios in these respective countries. So let's say if we were to take each of these countries as an asset class by itself, right? So this clearly means if the sheer amount of the scale of the numbers you're talking about is mind-boggling, right? We're talking about hundreds of billions, trillions of dollars and euros, etc. So what do you think, what sort of expectations are baked in to justify this level of interest and excitement in investing in Germany? Or what do you think is expected to happen in Germany over the coming years or maybe a decade or more for all of this interest to come in?
I have perhaps, I don't know if it's contrarian, but I think it's a viewpoint that in the general public, both investment sphere as well as maybe general mainstream media, it isn't actually being taken by others. Maybe they don't find the point of view interesting. Maybe they disagree with it. My point of view is that I think the German economy as an asset class had been underappreciated in terms of an investment, let's say, finding the right price for it. It had been underappreciated for at least 10 years, perhaps longer. And the reason why that happened, in my opinion, is because Germany didn't want to invest and reinvest into itself. Germany was in the cash flow phase, but not in the growth phase. Cash flow phase because it is a global powerhouse with regard to German engineering. German engineering, by the way, is never the most efficient. It's definitely not the cheapest, but it is the one that achieves the high precision tasks, the high quality tasks. If you want to automate anything, honestly, you either go to Germany or to China. There's just no other relevant player, in my opinion, in order of automating anything to the best degree. And so typically what customers will do is, if they want the cheapest and most efficient job, sorry, by cheapest, I actually don't mean it judgmental. I mean it the piece that will deliver you a very high ROI. Nowadays, customers would very seriously consider offers from China. If you want the high precision, high accuracy, high reliability piece, you would choose with Germany. There's hardly anything else that you would do. And so because Germany was in that zone for decades, it had always have the chance to capitalize on that. Now, since the days of Angela Merkel as a chancellor, it has been mostly, what's the term, harvesting rather than reseeding.
I see.
You know, it used global relations. It tried to play very neutral to all parties as much as it could, being the chief economy in the EU. But in the end, it tried to alienate nobody and be trade partners to everybody. And so that worked for a long, long, long time. But for investors, it clearly signaled that Germany is in a harvesting of cash flow stage, but not in a reinvestment into a new growth model kind of stage. And so what happens to assets when they are in that stage? Well, typically the multiple compresses. It is typically priced entirely on cash flow and not at all on future cash flow, forward PE, etc. And in my opinion, that's exactly what happened to Germany the past 15 years, maybe even longer. And now moving forward to nowadays, that means that people are seeing now an opportunity where on all of that strength, all of a sudden growth can again be baked in. And because that can be baked in, you can actually invest, you can buy the asset, and you can hope that it appreciates faster than anything else. So it's perhaps a bit of a counterintuitive explanation, but staying within the asset class kind of logic that you have given us for these two economies, I think that's actually a big contributing factor. There are fundamentals that are great about Germany. We can talk about those too, but I think that explains the thrust, the catalysis right now.
I think in the most recent episode that we had also discussed about Germany, you spoke about how following the model followed in other countries, this could also be a new way where Germany switches from being in a fiscal surplus to a fiscal deficit to drive economic growth through infrastructure, defense, maybe focusing a little bit more on regaining some sovereignty, if I may take the liberty of saying that. So, and if I may ask, how much of this do you think is legit, and how much of this is packaged for public consumption as a news piece?
I think all of it is legit. At least for the next 4 years. Let me add that qualifier. I would generally be cautious with anyone, not just governments, making predictions, let's say, beyond just a few years out. So much can happen, etc. I think all of it is legit. In my mind, the question is something else. In my mind, the question is how much of that will actually be invested effectively, and how much of that will basically evaporate in inefficiency, in bureaucracy, etc. You know, there are economies on this planet which have received huge amounts of subsidies, and still you're asking yourself, hey, what happened to your economy? Like, where's all that growth? Where's all that, lift up of the middle class? And people conclude, well, I mean, I don't know where the money went, but it didn't go here. So we're not in a corrupt country. Germany is far, far, far down in the corruption index. That's not what I'm pointing out, but you have other means to waste.
Oh,
capital.
Let me clarify what I meant. I didn't mean the money would not be used in the...
No, but that's what I'm saying.
Yeah.
That's what I'm saying. So I think the numbers that go into the system are very legit. I think how the numbers then produce within the system, that's the thing that Germany actually needs to fix. So if they keep it relatively bureaucratized. Let's use an example, right? So Germany has mass purchasing programs for its armed forces in terms of drones. Germany has produced fantastic defense tech startups. Actually, in case you didn't know, 93% of the defense tech funding of the European Union of the last year went into Germany. Germany is building up fantastic cluster, and so also backed by actual government becoming a customer, something that typically has made the US defense techs so powerful. So I'm very happy to see that stepping up. But if that comes in all parts of Germany with slow purchasing, with hindrances for the businesses to make offers pragmatically, if it comes with, well, we could invest 2 trillion in the next 4 years, but actually we're only able to sign the orders in 5 years, and in the meantime we have to kill ourselves with documents, none of that actually arrives in the economy. So I don't think we'll see a corruption problem. Never, not to say that it's zero, it's never zero, but it's just not an economy that has that kind of a problem. But again, you can have waste in terms of delays, complexities, etc. And that's what Merz, now that he has mobilized all the optimism and the capital, very, very quickly he needs to find pragmatic shortcuts so that the money can actually be put to work. We are seeing it in the construction permits. So far, Germany is finding within the allowed or permitted framework, let's say the equivalent of executive orders, it's finding ways to debureaucratize a little bit. However, there is such a behemoth of a state apparatus on building permits in Germany that might need a bit more dismantling. And so they are doing a very good job going quickly, going far within their means. But then beyond that, there will have to be structural changes over the Merz chancellorship. So I'm hoping for those.
And are there particular I know we also discussed this in the other episode we did on Germany, where you spoke a great deal about housing and infrastructure, especially public infrastructure being a driver of this renewed boom. Are there specific slices or initiatives within construction or specific kinds of projects which you're specifically more excited about, which could be influenced by this new bill?
Yeah, so for sure, infrastructure buildup when it comes to energy infrastructure, power plants, grids, that's very key. Public infrastructure and transportation infrastructure, schooling, hospitals will receive a good amount of money. I think the big, I don't know if it's a question mark. For me, it's a question mark. Is actually the manufacturing sector. So is there going to be a big reshoring? Yes or no? And how much is it supposed to contribute? For example, the 740 billion US dollar that the, let's say, executives, industry owners, etc., committed, will they have to be spent on manufacturing or on something else? The one key problem that Germany will have to solve is actually the energy price. And so the input factors of energy have stabilized a lot, and they are actually much more manageable now than they were 3 years ago. The transportation costs are still a problem. So Germany has among the highest share of low-cost renewables in its entire energy mix of the country. But you need to build a very resilient infrastructure to distribute that energy. It's intermittent, so you have to find those. If Germany can actually succeed in building out that power infrastructure and amend it with large-scale power storage, for example, in effective and efficient ways, which I'm a little bit skeptical, but there are people who actually believe it can be done more efficiently than I do, then it has made itself very resilient and actually reinvented itself to a large degree. And that will then also help the manufacturing sector actually access low-cost energy. So the next decade will be all about that. And we will know after 3 or 4 years whether that is actually happening. And if it's happening, you will see a manufacturing powerhouse revived. If that is not happening, then the manufacturing investments will just be redirected somewhere else. Now, one thing why the fundamentals of Germany are actually so strong is the German society, by and large, is hyper-educated. So that's something that in international economies looks very, very different. So in Germany, you have a dual, let me dumb it down, you have a dual education system. So basically, you typically have 12 years in school. You can basically drop out after 10 years. But then a very, very large portion of those who complete 10 years of school, so basically the first year of high school, and then they drop out, go into the vocational education system.
Yeah.
So that's a system that Germany pioneered. It's already from before World War II, but it continued that tradition. And the vocational system gives you an additional 2.5 to 3.5 years of formal training in whatever vocation you're actually pursuing. Can be healthcare, can be crafts, can be anything. Or you continue your high school education, and then again, a very large portion of those would go to university. The remainder would typically then still go into vocational training, which means you have practically very, very limited amount of the German population that has short amount of education or no education after the high school. And so that has created in international comparison a highly educated society and workforce, which international investors as well as the homegrown investors appreciate a lot, because you can do a lot with that.
Yeah.
So I think that's a fundamental that we need to keep in mind.
Interesting. When you talk about what's going on with German manufacturing, I feel like there's so many other factors. We'll probably not be able to get into all of them right now, and it also might be outside the scope of what we consider practical nerds. It's stuff around energy dependence, geopolitical interlinkages and implications of that, availability of workforce, immigration. Many front-running industries in Germany already having to switch manufacturing somewhere else for other reasons. So how do you reshore them back again to home? How much of a delayed decision that will be or may not be, depending on, I guess, what goes on with this bill and how effectively it's deployed.
I'll give you a provocative thesis, Shub. I never told you this.
Mm-hmm.
So I'm going to get live on camera, actually, your reaction, and perhaps you're telling me, dude, you're nuts.
Uh-huh.
My opinion is that there is much more value to be captured by reinventing the production of a kilowatt hour of energy versus AI. I think whoever actually reduces the amount of kilowatt hours beyond what a solar hour costs, a solar hour distributed through the grid costs me, so basically that's the LCOE, the levelized cost of energy. Whoever drops that by another 90% actually has more world power, more economic power than whoever owns, let's say, OpenAI, etc. Would you tell me I'm crazy when I say that?
No, I agree with you.
So German scientists last week created 43 seconds of stable fusion energy reaction.
Okay.
It's the longest stable reaction that was ever produced so far. In my opinion, I think definitely in your and my lifetime, and I actually think it might happen maybe in 10 years, maybe in 15 years, we will actually see fusion energy applied at scale. And so if Germany or the EU is at that, all of a sudden you have completely shifted the landscape in terms of energy production.
That would indeed be a very massive shift, for sure.
And I think that's where German investment in terms of the R of R&D needs to go. I'm not saying, hey, who cares about AI? Of course, there's multiple geopolitical arenas where you need to play and win. But if you can win this one, you will be extremely relevant and resilient.
Indeed.
Yeah. So look, you hear me optimistic. Believe it or not, a German guy being optimistic. I guess in the US, I'm just pessimist with my voice, not hyped enough.
Yeah.
But
for our audience, I can tell you, if you hear a German speak the way Patrick just did about any topic, that person is like all in with his
all in, man. Very much so. But look, let's talk about the other economy that we're also all in on here in Fundamental, the one that you have spearheaded for us for so many years, the country that you were born in, India. So I have the numbers here, Shub. So end of May, India surpassed Japan's nominal GDP.
Yes.
And India's nominal GDP for this year is now projected at 4.187 trillion US dollars.
And Germany, I think, is around 4.7, if I'm not mistaken.
Having here 4.187. I think Germany is 4.7.
Yeah, gotcha.
Yeah.
Yeah. I think it'll probably be in 2 years or so. I think India might be the number 3, 2.5 years, I suspect.
I think that's correct, because
Yeah.
they are seeing always between, not always, for the last years, they are seeing a reliable 6 to 7% year over year.
Yeah, the 6 to 7% is the real growth. Then when you add the inflation, the nominal becomes more like closer to 10 and a half, 11-ish. Of course, that's cheating a little bit. You're adding inflation, and not all economies have the same inflation. But yes, in
Yeah.
real terms, it is closer to 6.5.
So good times for India ahead.
Yeah.
Give us the update.
Yeah, so look, I think, look, to give you a picture, right, when I look at India as an asset class, what I find very exciting, which is why I consciously have to put on a different lens when I look at other economies, is in India, the default expectation when I go in, and we've been spoiled that way because of what we have seen, is addressable markets where you get upwards of 10 billion, or at least a few tens of billions of dollars, in best cases, mind you, upwards of 100 billion, 200 billion, and where the market as a whole, mind you, not just the niche, or not the specific SOM the opportunity is targeting, but the market as a whole, the addressable market, is growing double digits. That's kind of the general context we have got spoiled to see. And that is, of course, a brilliant setup, because if you have the opportunity to invest in a market which already has a large TAM, tens of billions of dollars, which itself, the overall market itself is growing 10% or more, and you then get to back younger companies which are hopefully better than the market, then in general, as a portfolio, the setup is quite nice, right? So that's the big picture. So that's kind of what I look at as a combination of large market and fast growth. Now, does that mean everything is perfect? Of course not, right? I think the one big challenge I foresee is we're kind of in this, as an economy, in this middle zone. What do I mean by middle zone? Where we are fast growing, uh, trying to break out of a low income country to get to, say, a middle income country, and hopefully transition to beyond being a middle income country, which historically, if you look at how global capital allocators look at such economies, you always have a tendency of, let's wait and watch till the economy proves itself. So I think,
Indeed.
as a economy, India is kind of in that phase, which is interesting, because depending on how you measure it, India right now is either the second or third largest venture ecosystem in the world. And I say second or third, depending on what your judgment is on China. Right, so
I'm
either
actually surprised that it's still only the 6th or 7th largest.
Oh, I said second or third.
Oh, 2nd or 3rd. Sorry,
Yeah.
I understood 7th. Okay, I got it.
So it was seventh, maybe 6, 7 years ago.
Oh, okay.
Yeah, I think now it would be the second or third largest as a VC country,
Yeah,
VC back
that
country.
checks out. That's what I was expecting.
Yeah. So it's a weird overlap of situations where you have a country which is simultaneously the second or third largest VC ecosystem. And therefore, if you look at many global capital allocators who have a global presence, India will feature very prominently in their portfolios. And yet it's in this sort of middle zone where it's sort of like an emerging market, sort of evolving, etc. So that leads to some interesting dynamics. So it's in some cases it is seen as a core part of the portfolio. In some other cases, it is seen as part of a broader emerging market portfolio or broader Asia portfolio, etc. So, do you recall, Patrick? I don't remember how many months ago it was, we spoke about how the bubble built up in Japan in the late 80s.
Yep.
And one crucial catalyst that happened, which inflated the Japanese market, was there started to be a specific Japan allocation in fund managers. Previously, Japan used to be part of the Asia and emerging markets portfolio. No, sorry, not emerging markets, just Asia portfolio. And then there was a separate carve out specifically to invest in Japan.
Right.
And that dramatically caused an inflection in the Japanese market. So India is nowhere close to that just yet. And I think that is the biggest, call it question mark, call it challenge, that it's also India's responsibility to navigate, I would say, right? In all fairness, and you know this also from fairly close quarters, Patrick, India does not make it that easy for global investors from a bureaucratic standpoint and transaction formalities standpoint, etc. On some
100%.
aspects, I don't mind it because it also creates a lot of investor protection. But for folks who demand very loosely ease of doing business, it is still a demanding environment.
Yeah, look, I mean, in the end, you will attract more capital if you make the investment and divestment extremely smooth and fungible. Look no further for proof than the launch of Robinhood or Trade Republic and what it has done to retail investors joining not just stock markets, but also index funds, etc., that they can all of a sudden trade mobile. So look no further. That's just a universal principle that has always been there. If you make your marketplace extremely accessible and smooth, your marketplace will see a lot of liquidity.
Yeah.
If it's also stable and trustworthy and,
Yeah.
no bandits, all of that is not the case for India. So if India, I hear you, what you're saying, if India makes the capital entry and the capital liquidation very, very smooth, it could actually completely debottleneck.
Yeah.
Is there like a natural incentive for the decision makers in India not to do that, not to do it that smoothly?
So look, it's as with most things in India, it's a weird mix of historic reasons and modern reasons. The historic reasons go back to, okay, again, we'll stick to the practical nerds aspect of it and not make it overly geopolitical or historical, but think back to the circumstances that led to the colonization of India and how easy at back then, how easy it was to trade, right? So there is an opinion, hey, what happens if we make things too easy for trade and business? Could we end up in circumstances that we can't get out of?
Oh,
So
but you're a powerhouse now. Like back then, it was a fragmented country.
that is actually not necessarily true, but maybe a discussion for another time. So I think the aspect of unlearning historical baggage and also developing enough self-confidence to realize that, hey, you know what, we can take anyone on. I think we're kind of somewhere in the middle aspect of that. We aren't fully in any direction, and there's enough voices, by the way, lobbying for what you just said, enough of them, because also as purchasing powers have increased, as more and more investing interest has grown, as you can imagine, everyone is wants exactly this. um, it is growing. How I would like to believe it's a question of a few years away, and not decades, etc. I would like.
I'm surprised to hear that because I distinctly remember. I never told you this, Shub. I distinctly
Mhm,
remember when I went to school
mhm,
20 years ago now.
mhm.
I can't remember. I think it was in the US where they played this video to me. An IIT professor
Mhm.
telling, it was a male professor telling his students. I won't try to emulate the accent now, so I'm not going to insult you that way.
Uh-huh.
But he was telling his students in the West, they're all afraid of you. Your education and your engineering prowess will dominate all of the world economy. That professor at the IIT said that on the record 20 years ago. So where's all that confidence now that you are the fourth largest economy in the world? Why not open the markets and make them more fungible then? If you already had that level of confidence 20 years ago, perhaps rightly so.
Yeah. Yeah, I mean, look, to the specific example you provided, I have some comments and remarks there, but maybe
I'd
we'll
like to hear them.
okay, I can get into it. Look, I think, in my opinion, one key aspect which actually on the surface to the outside may seem like a huge win, and it is a huge win. I think we have tremendous human resource, right? Not just what is created within India, but also all the human resource that's been exported outside, right? uh, and maybe I'm also a small part of that myself, by the way. So all the human resource that's exported out, but I would argue it is not necessarily a function of human capital formation. I think it's a function of the sheer numbers, and a sort of, call it, vitality, and the extremely competitive nature of the system, which which forces you to uh, develop a certain level of skill or aim for the apex. Now, I also think there is so much more that can be done for human capital formation to drive more advanced industries in the future. And especially if the idea is to have more homegrown, advanced manufacturing, advanced industries, and I think these questions maybe are less critical today, but might be become more important 10 years from now, when the more crucial question to which will be asked is, hey, can we transition, uh, or can we be something more than a middle income country? So many other larger countries have kind of got stuck in that phase where they've never been able to move out of being middle income countries. And I think that is when it will become more significant. But look, coming back to the earlier question you asked about confidence, I think directionally, the level of confidence, the level of assertiveness, the level of self belief, it's been rising quite rapidly, right? I think the general overhang that we've had for a while, for several reasons, by the way. I mean, I spoke about the colonial past, but don't forget we've also had several decades where there was significant influence of like a Soviet style model in India as well. And I think that also has influenced how things like markets and uh, investing, etc., are treated. Not necessarily that it's anti-capitalist, but the level of bureaucratic enforcement and involvement in these matters. I would like to believe a lot of that has been gradually changing for the better. And I'd like to believe it's a question of being a few years away until we see not necessarily what we already have in the West, but something comparable to it. Maybe it's just a few years away.
Shub, you have this number, but I'm gonna ask you nonetheless, pretending you don't know it. I actually am gonna ask you two questions. I know you have the first number, so let's talk about the Indian, the confidence the country of India should have in its human capital and what it exports to the world. How many of the US-based unicorns are founded or co-founded by Indians?
And when you say Indians, you're including diaspora,
Yeah,
second
let's
generation.
say Indian origin, but
Yeah.
not like
That would
third
be quite,
generation.
that would be quite large. I, if I had to take a guess right now, are you asking in percentage terms?
Yeah, let's give us. Yeah,
I would guess maybe like 40-ish percent.
it's about 20% currently of the
Okay.
unicorns. 20 in the
So
US
that's
though.
very significant, yeah.
Yeah, and of the Fortune 500 companies, how many
Oh,
CEOs?
I think if you were to extend to CXOs, I think that is closer to 50%.
That would be very large. Yes,
Yeah. If it is CEOs, I would say maybe 25-30%.
it's 10% as of the beginning of
Oh,
2025
okay.
of
I'm
the
surprised.
Fortune
I would
500
expect more.
companies.
Okay. But
I
still,
mean, that's
on
purely
a,
American companies.
yes.
So
Yeah.
not
Yeah.
even your country.
So there is quite a bit of power there. You're right. I mean, look, if you ask me, I think the time is now to start exerting assertiveness. By the way, there's an interesting parallel with both these countries we're talking about. There is an aspect of asserting, reclaiming, demonstrating sovereignty, right? Uh, and I think that is going to be an important theme for both these countries in the coming years. And it's interesting how the journeys are different. Journeys until now have been different, and the journeys for the next few years may be more similar, judging by what we have said so far. But these are all, in some ways, manifestations of a desire for expression of sovereignty.
So, what's behind the continued growth of the Indian economy, the 6 to 7% in real terms? What's behind that? Why is it happening?
So, look, I think there's a few tailwinds and enablers sort of coming together simultaneously. One is, I think, so the government has been very proactive. The recent government, the last 10 years or so, has been very proactive in putting money into infrastructure development and growth. Since that has further made, uh, and this is something you and I discuss all the time, right? It's just the basic rails of getting work done and the capacity build up. It's been delayed for so long in India, and finally we are entering this mega build up and infrastructure build up phase, which we entered a few years ago, and now I think we are in the maybe the golden phase of it, where things have sort of entered into a nice sweet spot. It's the engine is nicely humming along. That has made just the act of moving things around, building stuff, transporting goods, transacting businesses, etc., more seamless. So that has stimulated business. More people, at least as far as infrastructure and construction are concerned, more and more people are entering, getting jobs and entering employment. That has meant that a very substantial proportion of India's population, which was earlier in rural and agricultural based centers, has found, hey, you know what? Maybe there's something better to be done in life than agriculture. And therefore, we are also moving from a society and a population where a majority, like a overwhelming majority of people were engaged in agriculture and agriculture related professions, to many of them now moving to cities to do either manufacturing or construction or maybe even pink collar jobs as an entry level profession. And that, of course, when you do that, that further stimulates consumption by middle class, because now you have folks available to do offer services which were previously, for whatever reason, inaccessible. And the demand and supply engine is kind of humming along nicely. Along that way, what has happened is India has also emerged based on the human resource point that we mentioned, both Indians based abroad as well as in India. They're kind of stimulating more job creation in services. A lot of these services are not, I mean, of course, there's a lot of services supporting the domestic economy, but a lot of back office knowledge operation services across the world are supported by Indian offices.
You mind the agents, right?
Yeah, the AI agents,
Yeah,
exactly.
the
Yeah,
AI.
yeah. So when you check something with ChatGPT or Claude or Gemini, it's just some Indians like quickly, like frantically typing
You
away.
can hear them typing.
Yes,
If you listen very closely to your ChatGPT instance, you can hear them
that's right.
typing.
That's
Yeah.
right. So when you say Google is dying, no, it's not dying, because they're just frantically typing. So they are doing that. So it's like a nice flywheel of consumption, job creation, income generation kicking in. Now, when that happens, more taxes flow in, the government has more budgets, etc. So it's a nice flywheel. Along the way, there have been some events which have kind of, I guess, been lucky breaks for the country. So it's now, since we are also talking about geopolitical considerations, it's being seen as a nice flank or alternative to China when it comes to manufacturing, supply chains,
Indeed.
or geopolitical lobbying and things of that sort. By the way, on a lighter note, as we are speaking, neither Germany nor India still have a trade deal with the US. So, that's another expression of sovereignty, I
So
suppose.
what?
Yeah, we have better things to focus on.
Yeah.
Yeah. Uh, so I think all these things, you know, great economies have been built with fewer tailwinds, I would say. And I would say the time, it was long overdue for anyway India to start to go up, because it anyway started with a very low base, with a very low income status, which it still is. And I think now it seems like it's kind of found its path, similar to what China was like in the 2000s. perhaps something like what Germany was in its rebuilding phase in the 1950s, what South Korea went through, I believe, in the 60s, 70s, and 80s, something of that sort. Now, how far India goes, I think that's the big question, which remains to be seen, right? Will it plateau at some point, or will it keep going all the way? That's the, I guess, 10 or 20 trillion dollar question.
Will the Indian super demand economy consume Indian brands and Indian manufactured goods at a very high clip, or will it become the Indian consumer will love international goods a little bit more?
So there are tailwinds for both, and by the way, both dynamics are simultaneously unfolding in India, depending on what category of products you speak of. In, call it, more niche consumption, or lower or mid-end products, or something which does not involve advanced manufacturing or demonstration of luxury or a luxury aspect to it, there seems to be an increased demand, not only by the way of seeking domestic manufacturers, but also of seeking new companies like non-legacy. Because the other difference is India has a very young population compared to most European countries. The average age, if I'm not mistaken, is around 27 or 28. So the population also does not necessarily, understand or even come with a predetermined notion of loyalty to certain companies. There's a very large population which, so there's a very large population which is young and which is seeing disposable income for the first time. So it's a very unique combination like that. So they don't have any association with brands formerly built. So there is a demand for new homegrown brands, but simultaneously, not to ignore the challenge, as you very rightly pointed out, made in Germany comes with a lot of trust. Made in India doesn't quite come with that level of trust. So when there's an aspect of advanced manufacturing or luxury involved, almost universally the demand will be for something made abroad.
I mean, the way China used to manage that, starting maybe late 80s and then throughout the 90s and early 2000s, was okay, let's get the international manufacturers here, let's produce here, let's get them into joint ventures, let's make sure that there always has to be a Chinese co-shareholder. And then over time, let's learn how they do it. And now they build the best electric cars in the world. It's just the truth.
Yes.
So do you see a similar path for India? Are there structural reasons why that wouldn't be India's path?
So there are similarities, but also differences with what you just said. So India also, for over 30 years, has had a similar model with, for example, automobiles and a few other industries, where the expectation was some sort of joint venture or local entity would be set up. Not in all industries, and I think the rules are more dynamic now. But here's where the other problem kicks in of what I said earlier. The bureaucracy for capital being brought in from abroad is so much more difficult and demanding in India compared to China. So, what China did exceptionally well, and kudos to them, in the 90s and 2000s, China drew in a ton of foreign direct investment and foreign investment in general, and China made it quite easy
Yeah.
to accept that investment and make it fully deployable in capital investment. India, in my personal opinion, has not done a good job of that at all, right? And that's an enormous area of improvement. But I have to say, things are changing for the better. I don't know if you've been following a lot of Apple commentary from Apple now suggests that India is now going to be their primary market to shift out of China,
Yeah.
especially for, I mean, ironically, for iPhones that are to be sold in the US. So I think the stage is set and it's improving. I still think there's much more to be done for India, and it's India's game to lose at this point. So it's really India needs to up its game and claim its
So
position.
this is where I need to insert the obligatory stablecoin joke from this week. So now that we get stablecoins, that problem will be solved for sure. So India can launch its own stablecoin, and all of these
Okay.
problems will evaporate.
Very nice.
But I mean, not to disclose names here, but it's actually quite funny. You and I we share an investor friend who's an early investor actually in Zepto. So
Yeah.
Zepto, one of the very, very successful and highest growth companies probably of the last 3-4 years in India. So early investor. They are considering an IPO sometime here in the nearer future. And so in India, as you know, you've taught me, and you know, you've also shown me how that process works even for us. You have to create a dematerialized account in order for your stocks to be held, and they have to be held in there for public stocks. And so if your company is that you are holding private shares in is at some point going to become eligible for an IPO, there's no discussion around it. The shares of that company have to be in said dematerialized account, which, by the way, quick side note, I effing love that, because this is actually a way how you combat naked short selling, because you make every share countable. It doesn't even have to be a blockchain. It has, you know, it's completely sufficient to have it on a public registry and number each share, make it unique, right? So that is fantastic. But that means that as a foreign shareholder, now you need to go through the banks are the ones that create and hold these dematerialized accounts. And so now you have to open that account, do that as a foreigner. Holy moly. And so we're a fund. Okay, we have infrastructure, we can afford fixed costs, we have people that you know advise us well, we have you who knows how to communicate there and represent us, and now there's this angel friend from abroad who owns these shares in Zepto and who will make a killing, but now he had to get on a plane in order to fly to Bangalore, and he said to us, I said, hey, so you're going there or what? Yeah, I'm going to stay a week to open the DMAT account. And I remember when I told you that that's what he said, you're like, hey, he needs a month, not a week.
There's no way it's happening. It didn't happen. There is no way it's happening.
He came back without the DMAT account, in fact. So he'll have to go again.
So again, look, I don't want to sound like a negative Nancy. I mean, our history shows that we are extremely bullish on India, and rightfully so. But there are structural challenges and problems which I would like to believe the voices are getting louder and more influential. I'm hopeful it'll go in the right direction in terms of making it much easier to get money in.
Yeah. I would think so. I mean, India historically certainly has a hierarchic and bureaucratic streak. 27, 20-year-olds, 28-year-old average age in India. I think there's reason for optimism that both the hierarchy and the bureaucracy will get chipped away.
Yeah, I think so too. Yeah.
Awesome. Good. So 2 very important countries for us, 2 pioneering countries in terms of construction tech, AEC tech, project-based economy. Very important in our fair value in our portfolio. Not the only countries, but certainly two core ones. So
we're making Germany great again, and we're making India great again.
Very great again. Always been great, man. Always been great.
Always been great.
I don't need the again in there. I don't know why, but you know.
Nice.
Made for Germany, made for India.
You know, I said that to someone recently. Hey, you know, there's lots of action happening in Germany of making Germany great again, and for some reason that person was a bit alarmed that, hey, you know, is it harkening back to some more interesting times from a few decades ago?
Oh God, no. Oh wow, that person must be very far away from the action when they said that.
Yes.
Okay, got it. Yeah. All right, man. Thanks for the good chat.
Loved it, sir.
See you soon.
To the next one.